And with that, let's go ahead and get started. So first off, a little bit about myself. My name is Ernesto Bobadilla. I have a bachelor's in mathematics, a master in public administration. I've been with the county over 15 years. Currently, I'm the business development manager, operations center manager with the Department of Consumer and Business Affairs. Previously, I was working as a real estate appraiser, doing residential and commercial property appraisals with the assessor's office for tax purposes, valuing commercial properties up to $500 million in worth. Prior to coming to the county, I was an international sales manager for over 12 years. Lived abroad for 2 years and traveled through most of the Americas and Western Europe for business. And through those travels, I got to work with a lot of small business owners as I trained them in technically to help them represent our product locally. And that's where a lot of the business background comes from. Now, just to give you a little bit about a little bit of information of our department, Consumer and Business Affairs. We have a consumer side that provides consumer counseling. So if you buy anything, you're having issues, you don't know what the law says. As a consumer, you feel that they did a bait and switch, they're not honoring the warranty, you can reach out to us. We can provide you guidance. If things do not work out, we will actually file a formal complaint investigation if we feel it was a scam, they're taking advantage of you, the community. We also have a foreclosure prevention unit right now with COVID-19. Many of you have been impacted. And if you're having issues potentially facing foreclosure down the road for lack of income, we do have a foreclosure prevention unit can give you guidance, assistance of what you can do to help you navigate the process with your financial institution. On the small business side, we have small business concierge, which I oversee. And the unit is basically assist entrepreneurs as yourselves or business owners with either helping you, guide you so you can get your doors open or grow your business. We have the LA County Certifications Unit, the PTAC as we call it. And under PTAC and certifications, we assist business owners who are looking for potentially get into government contracting as an alternate source of income by being able to guide, counsel you on what to do, how to do it, how to prepare, how to register at the federal, state, and local levels to pursue government contracts in hopes that you're able to win a government contract and get the supplemental income. And then lastly, for both consumer and small businesses, we have mediation. If you're having issues with the neighbor, with the business, with the contractor, you can bring all parties to the table and negotiate, see if you're able to come to an agreement. It is binding. If that doesn't work, we do have small claims advisors to help you and assist you with going to small claims. We do enforcement for unincorporated minimum wage. And many of you heard recently the Hero Pay has been passed for unincorporated LA County in Long Beach, Los Angeles, the city of LA, I believe Santa Monica is in the process, which based on the Hero Pay can increase up to $5 per hour pay for frontline workers working at grocery stores, pharmacies, and there's certain nuances that for the business to apply. And so to learn more, if you currently work in that industry, if you're a worker, give us a call at the 800 number. Our wage enforcement unit will be able to provide you that assistance and guidance. If you're the business owner, if it applies to you, if you're a worker, again, if it applies to your employer and what to do. And then finally, we provide also the Center of Financial Empowerment if you want to learn more about becoming financially empowered. And then, of course, we provide this education, public outreach. Our biggest consumer complaints are landlord tenant, retail sales, real estate, auto, identity theft, and debt collection. Before we really get going, I'm not an attorney, I'm not a CPA, so I'm not providing tax or legal advice, it's just information. Got to go throw in the disclaimer. And with that, let's go ahead and get started. So today we're going to talk about pointers for small businesses, business financial planning credit. Then we'll get into the regulatory side of it on the second half, which is all the permits, the licensing, the requirements. And finally, what resources are out there? You're going to be inundated with information today. For some of you, it may be overwhelming, maybe a lot of information. You might be trying to figure out what to do, where to go. This will provide you that information, the guidance of where to go and get that assistance. Of course, you have the LA County Library, which is the wealth of resources, and then we'll provide additional resources for you to take advantage of. So, essential steps to starting your business. What should you do? First off, this is not required, but it is strongly recommended. You want to have a business plan. And why a business plan? Many of you either have an idea, have some skills, and you want to turn those into a business, maybe make a little bit of money on the side or formally get into a business. So with this, you get an idea. If it works, you're going to make money. If it does not work, then you go back to the drawing board and keep tweaking it, because sometimes it can take a couple months to get a business started, get your business going, start getting your clients, and to figure out what the best numbers are. If it's better to figure out the numbers on paper before you start than to start, be paying rent, utilities, overhead, potentially be paying staff, salaries, payroll, and burn through 6 months worth of money while you figure things out in real life. So it's very, very important to go ahead and do this on paper. And so there's two types of business plans. Of course, if you're looking to get a loan, get assistance, showing up at the bank and asking for the money, yeah, of course, you go to them for the money. However, they're going to want those details. You have your traditional business plan, which tends to be a little bit more in depth. You're going to provide more information, more details. Many of you may be looking to start a commercial online business, right? Minimal inventory, you need your internet, you need your computer, you're going to sell online on Shopify, on some of these sites, so it isn't as big of an investment in money, but a bit of time, a bit of money. So you may not be looking at this time to get a loan. It's still recommended to do a lean startup plan. You still want to kind of put things down on paper, figure things out. As you know, there is a lot of competition online. You're going to be competing with millions of people across the world to sell your product. How are you going to stand out? Who is your target audience? What are you going to do? What's the price point? So part of the business plan helps you put this together, figure this out, and have a clear path. How often do you jump in a car and drive aimlessly down the street to figure out if you can find where you're going without looking up an address, without looking at a map, right? So it's similar with the business plan. So conducting market analysis is part of your business plan. And this is just simple questions that are going to help you start thinking about what you need to do, how to do it, how to go. So for example, the first thing is, as you're looking to open up a business, what's the sales potential? How much of the market can you realistically capture? One point of note, for example, if you're looking to open up a restaurant, there's statistics have been done, and it says that most people will not drive more than 2 miles from where they're located to get to go to a restaurant. So that means during the day, if you're near a commercial area where it's primarily commercial, not much residential, most of your business is going to come from the workers or customers that go to those businesses. But once the evening comes around, if there's no residential areas in the area, your businesses may drop significantly unless you are that popular or doing something to attract people to drive into the area. For example, downtown Los Angeles. In these days, there's a lot more activity at night, well, pre-COVID, than in the past. There's a lot more apartments that have been built and condos. But there was a time 15, 20 years ago, you'd go downtown and after 6 p.m., it was dark, it was empty. You didn't want to go downtown because there was nothing really. There may be a bar here, maybe another restaurant, but most of the streets were pretty empty and dark. So if you had a business there, most of your business was going to be during the day. By 5, 6 o'clock, you'd shut down, you'd go home because, again, there's no one to sell to. So you really have to think about, based on where you're going to locate yourself, how much of the market can you capture? Your customers and demographics. many of you are going to open up a business that you're willing to sell to everyone, and everyone will be your customer. It may not be specific to gender, age, race, or mental status. However, you still, many times we hear the term low-hanging fruit. Who is the biggest bang for the buck? Who's going to be your primary customer that you're going to reach out to drive your sales early on until word of mouth and enough marketing brings in other customers? And that's something to really consider, think about, because at the end of the day, again, you are on a limited budget. You can't put up ads in the paper. Well, maybe you can. Is it worth the cost? Put an ad on TV, a billboard, send out flyers. What are you going to need to do to bring in? Is your audience your immediate community or not? So this is very key. You need to figure out, okay, who are my customers? Which customer am I going to get the biggest bang out of? So you can target your marketing to that group and eventually extend your marketing, or of course, word of mouth is your best marketing for more customers to come to you. The next thing is geographic location. Where are you going to be located? Are you going to be in the city, in the rural area? Are you going to be eventually just local, or are you looking national? So all these are things to consider. And are you going to be online or brick and mortar? Based on your location, again, using the restaurant example from earlier, within 2 miles, most of us, if you think about it, will not drive. So are you going to be near a residential area and focus on that community, or are you going to go after more of a commercial and be in a commercial neighborhood or zoning area? So things to consider. Think about accessibility. It's not just a matter of opening your doors. Are you accessible? Before you sign a lease, you want to make sure that, is there enough parking, whether street parking or on-site parking? How many times have you driven by a place and there's no parking? They don't have parking in the back, and there's never parking on the street. And you always figure, someday I'll stop, someday, and next thing you know, the business is closing. You never made it to the business because there was never parking in the area. So it's very important, are you accessible? When I do this presentation in person, I love to ask on accessibility and location is, what side of the street are donut shops on? And, everybody gets silent for a little bit, thinks about it, and then they start raising their hands, they start shouting out answers. And so if you think about it, if you end up buying donuts or coffee in the morning, whether for yourself or your staff, just on a weekend, as you have a long trip, you didn't have time to have breakfast, and just going to quickly run in, grab a quick coffee, grab a quick donut sandwich, and hit the road, you're more likely to stop at one that's on your side of the street. So donut shops tend to be on the side of the street where traffic is heaviest on the way to work. Because how many of you are willing to turn left in heavy traffic in the morning to pull in to get your coffee, to get your donuts, to get a bite or a breakfast, and then turn left back out of the business to continue? Many of us will not be that brave, because traffic is terrible, right? Right now during this pandemic, with a lot of businesses curtailing the number of staff, many people working from home, traffic is not as heavy as normal. But once we get back to normal traffic, many of us will not brave that left turn. So if you're opening up a donut shop or a bakery that provides baked goods items early in the morning for breakfast, you're going to want to be on the side of the street where traffic is the heaviest on the way to work. So these little things pop up as you're doing your business plan, as you're doing the research, thinking through why, where, how. They're basic questions, but they make you think through, and it makes a big difference. You want to know this before, not after you open your business and you figure, oops, I should have been elsewhere. And then zoning. Just because the landlord tells you, yes, you can operate your business out of my location, doesn't mean you will be allowed. If the space is zoned for office, you may or may not be able to do retail, or you may or may not be able to open up a pharmacy or another type of business there. So it's very, very important to check with your city And when I get into the regulatory area, I'll get into a little bit more zoning and provide a little more information. But again, zoning is key. Before you sign any lease, you need to check with the city or with LA County if you're an unincorporated to ensure that you are going to be able to operate your business out of that location. As part of your business plan comes a financial plan. You need to figure out how much money you need to start or grow your business. And of course, financial projections. If you think about it, when you put together a financial plan, it's usually recommended to do a 3-year plan. And if, let's say, you estimate it's gonna cost you $15,000 a year to run your business every year. You're gonna be working from home, so cost is materials, vehicle leases, and a few other items. Let's say $15,000 per year. Well, that first year is going to be that much more expensive because you're going to need to potentially buy materials, buy equipment, buy inventory, whatever it may be. So that next first year, you may need an extra $30,000. So 30 plus 15 is 45. So that first year, your expenses will be 45,000, and then your second year, 15. Your third year, 15,000. If you think about it, by the second year, you should be doing potentially business, earning income. So that's going to offset a bit your 15,000 that year. Let's say that year you estimate you're going to earn 5,000 in income that year. So that means 10,000. You'd only really need 10,000 for that second year. By the third year, your sales are in the 10,000, so you only need 5,000. So now we're at 45 for the first year, 10 for the second year. That puts us at 55, and 5 for the third year, 60. That's $60,000 to operate your business for the first 3 years. So as part of the financial plan, especially if you're going to a bank to get money, that's the type of information they're going to want to see. What's it going to cost to get your business going, which is going to be the heaviest the first year. But then in the following years, you need less money because now you're making that money. So it's going to reduce. And that's part of the projections, playing with the numbers, figuring out what the potential is, what you can do. And all this comes in handy. Even if you are not going to borrow the money, it's good to know. I had a client who reached out. They launched their business. They did a financial projection. They actually padded it a bit, and they were really good at making sure they had enough money when they opened. Once they opened, unfortunately, by the time they called me 6 months after they had opened, they were doing very well. They're doing better than they projected. The drawback is that it took 6 months longer to open because there were a few issues with their building permits, with the construction delays, issues with the contractor. So those extra 6 months of unexpected expenses of rent and other expenses that came along with that delay ate up into their money for the second, third year. And so they were looking to see what they could do to get a small loan to offset the extra money they had to spend up front. So they were doing well. They just needed a little bit of money to help them because they were exceeding their projections, but they know a bit more cash flow. So, and I'll get back to cash flow in a bit. So this is very, very important to do it. So part of this process is making the numbers work, playing with the numbers. So for example, let's say I decide to open up a Trek Wars collectible store tomorrow. I've been going to Comic-Con for about 20 years, minus this year since it was canceled. Well, last year was canceled, and potentially this year may be canceled again. And so I figure, I'm going to start selling these items. So I figure out my monthly fixed cost. It's going to cost between rent, utilities, overhead, website, liability insurance, $13.50 a month. Now I'm going to be selling premium figures, and I'll be making $15 per figure. My sales price, $65 per figure. The cost of that figure is $50, so my profit is $15. So what exactly does that mean? So if I take my monthly fixed cost of $13.50 and I divide it by the $15 I make per sale, That means I need to sell 90 figures to break even, to cover all my monthly fixed costs. So every month I need to sell 90 figures to break even. If I sell 91 figures, I've made $15 in profit. Now, what can I do to increase my profit and hopefully have to sell less figures? Well, I can, of course, sell more figures than 90 and I start making a profit. However, if the market potential isn't there, remember, these are premium figures. So mom and pop who are going to buy a figure for their kids, they're mostly going to buy the $5, $10 version at Target, at Walmart, because they know they're going to destroy it, versus a $65 figure that will be destroyed. So collectors, there aren't many. I'm not going to be able to find them, in every community. I may have to expand to neighboring cities. What's my competition? And of course, competition online. The other thing I can do to make a profit is increase my markup. So if I'm instead of selling for $65, I sell them for $75, $85. So I've increased, by increasing how much I sell it for, that $15 profit will go up to $20, $30, $40, $50. At one point, I'm no longer going to be competitive. At one point, I'm going to price myself out of the market and I will not be selling any figures. So again, by doing the research in advance and playing with the numbers on paper, you can decide what these numbers look like to get a better feel and a better handle before you launch your business. Or lastly, I can also buy in bulk, get a discount on my costs and goods and services. So if I'm buying in bulk, I know I need 90 figures a month. Probably not it's not in my best interest to buy 90 figures a month if I don't even know if I'm going to sell 90 figures. However, I can maybe buy 30, right? Buy a third, and by buying 30 at a time, potentially I can at least reduce my inventory, not have over inventory, invest too much money in inventory, but at the same time, I can hopefully negotiate a discount or talk to the wholesaler and say, I'm going to buy 90 figures. I'll buy 30 at a time. Can you give me a price on 90 figures? And I commit to buying the 90 within 3 months or within 2 months. So it buys me time. I can potentially get a better cost without having to increase my sale price to $65. I can maybe now sell it instead of buying it for $50, I can buy it for $45, maybe $40. So again, by doing this on paper, you can figure it out on paper versus paying rent and taking time to figure it out while you're throwing money away. Figure it out before. Very important of the business plan, financial plan. And part of your business plan, financial plan is something, as you're looking to open a business, is you need to know what your credit looks like. So at the end of the day, your credit is going to be your business's credit. If you're looking to get a loan, they're going to be looking at your credit. What does it look like? What's your FICO score? Usually, when I do these in person, I do ask, what is your FICO? When was the last time you checked your FICO score? And I usually ask people to raise their hands if they've checked it in the last 6 months. And usually maybe about 50, 40% of the people in attendance raise their hands. And usually these workshops, depending on the location, will vary from 30 people to 100 people. And again, usually it's about 40% that rate, 50% that raise their hands that have checked their FICO score in the last 6 months. Now, nowadays, and I know in the past it was difficult, unless you're buying a house, buying a car, you're getting a loan, usually they tell you what your FICO score is. So that's the only time you'd get it, unless you would pay one of the credit bureaus to provide it to you, so it wasn't so accessible. In the last probably 5 years, most financial institutions, if you have a checking account, a savings account, any type of loan, through their website, through their app, you're able to check your FICO score. Very important to know what it is and to learn what you can do to increase it if you're looking for a loan. And it's good to understand what your FICO score is made up of. What does it mean? So 35% of your payment history is calculated into your FICO score. 30% of that score is how much you owe, 15% credit history. So even though credit history, you may have had great credit for 20 years, you miss a few payments, more than a third of your score, it goes to payment history. So again, very important to always pay your bills on time and stay on top of it. Along with your credit history comes, of course, knowing what is on your report. So it's important to check your credit report because, again, you may be making your payments on time. However, the credit bureau can make a mistake and not report it correctly and report that you've made late a payment. By checking your credit report, you can make sure someone else did not, there's no identity theft and no one else has taken out your a credit card or loan or mortgage under your name. And of course, good credit means higher loan availability. And so I highly recommend you check your credit report 3 times a year. Usually when I ask when was the last time someone checked their credit report in the last 6 months and last year, that usually drops down to maybe 20%. Very few times is maybe 30% of attendees. It's not so common. So I highly recommend, for those of you who have not done it or who are doing it, great job, keep doing it. You actually, through annualcreditreport.com website, you are able to request your credit report from each credit bureau once a year, which means you can get up to 3 credit reports, one from Experian, one from Equifax, one from TransUnion. Highly recommend, take advantage of this free resource. There's plenty of websites. If you turn on the TV throughout the day, there's plenty of commercials where they're pitching, come to us, we'll give you a free copy of your credit report. Again, if they provide it for free, they're going to try and sell you additional items. And more than anything, they may be selling your data. Going through annualcreditreport.com, this was created probably now 30 plus years by the federal government to give you access to that credit report for free. Because you are going to Experian, Equifax, TransUnion, the credit bureaus may try also to sell you protections, other items. You don't have to get anything to get the free report. Take advantage of it. As part of also learning or opening a business, budgeting is very, very key. So you have to budget yourself, and budgeting comes being financially empowered in your personal life. So if you're not able to budget in your personal life, it's going to be very difficult to do it in your business life. So if many of you currently don't have a fixed or you've created an actual budget, I highly recommend you do. Along the bottom, there is a link where you can reach out to our department's financial empowerment unit, and they have an excellent guide which includes a lot of recommendations as well as this start your budget exercise. And of course, if you Google, you can find these online at many sites for free. And it's going to help you make that plan. It helps you to save for the future. It protects your money. It helps you understand your credit. And of course, you want to maximize your money. So if we quickly just go through this, start your budget, the first section is essentially all your monthly income, all money coming in. And then what you do is you start deducting item by item. And if you can see, saving is the first thing you set aside for or deduct before you even get to your housing, your rent and mortgage, food, transportation, health. Why? If you do not save on the front end, you're not going to save on the back end. And that is true. That was true for me for many years when I was younger. And so it's very important to set money aside. Even if you start off with $20, $30, $40, you want to set money aside. Because the reality is you get your paycheck, you're going to pay your rent and mortgage, you're going to buy your food, your transportation, health. And throughout the month, if you've not set money aside and you see you have money in your account, you may say, well, this weekend I worked hard, I deserve a weekend trip. You can go spend money to do a quick little weekend trip. Or I'm going to go out for dinner, I'm going to go out for drinks. I'm going to buy something I want versus something I need. Because the money's there, it feels like you have that extra money to spend and you're able to afford it. If you put the money aside and do that sacrifice, you'll see less in your checking by the end of the month or through the time. And what does that mean? That means that you will less likely be willing to spend if you do not dip into your savings. And if you're going to be running a business, you have to be able to do the same with your business, not overspend, not overinvest, or be willing to, your business is doing well, I'm going to grab a little bit from the business to pay off my car loan or pay off my rent or my mortgage. Again, it's very important to be financially empowered and be budget and stick to your budget. So I definitely recommend, as you look to start a business, if you have not budgeted, done a budget in your personal life and stuck to it, start working on this so you can get the practice for when the business comes. Top funding sources. So as you look to open up a business, many financial institutions, many banks tend to be very conservative, and because you're starting a new business, you may not have a business background, business knowledge, you may have not ran a business in the past, and therefore you're very high risk because there's nothing to show that you know how to run a business. Now, sometimes you do have those of you who, let's say, in construction, maybe you work in a construction firm and you were managed the books, help run the business. Now you've decided to open up your own construction company as a contractor. So you have some insight, you have some experience, you have the licenses. That may help the possibility of a bank loaning you money. But those are some of the challenges you see. A survey was done, and based on the survey done, approximately just under 100,000 bank loans were issued per year to small businesses. So at the end of the day, only 1.43 of startups were funded. Many times I have business owners reach out, or entrepreneurs say, no, I'm going to try and get a venture capitalist to invest in my business. 0.05% of venture capitalists funded a startup. Angel investors, they have funded more than venture capitalists, but again, not even 1% of businesses that apply get an angel investor to fund. Because again, they're investing their money in your business, high risk. They're going to invest in something they know is secure. It's more of a sure thing, and the way to prove it and show it is having done the due diligence by putting together your business plan, putting together your financial plan, because it shows that you've created your roadmap and you're able to do it correctly. And again, don't forget, at the end, I will be covering the resources to learn how to do that, because many of you may not have a background and may need that help, that guidance. Next, personal savings and credit. 50% of startup businesses are funded by your own personal savings and credit. 38% are funded by friends and family, which makes 95% of funding of all startups to be either your own personal savings or credit, family, friends, and usually I'll add the word fools, the 3 F's, family, friends, and fools, because if you didn't do your due diligence in creating your business plan and a family or friend gives you money, invests in your business for you to start in your dream, if you've not done the due diligence, there's a good chance you may lose that business. So very important, do the work, figure it out, don't just run and do it blindly. And then, of course, there's crowdfunding. Crowdfunding in recent years has skyrocketed. And because it has skyrocketed, a lot of entrepreneurs are able to get that funding through crowdfunding. But it is a lot of work, because for these crowdfunding sites, you're going to have to create a page. You're going to have to market that page to get people to invest in your business. It may be $1 at a time, $5 at a time, and it's doable. You just have to really push it and do it. So look at the sites, see what they require, what happens if you get funded, if you get the money, if you reach your goal. One of my colleagues from another department with the county used to collect, well, still collects G.I. Joe figures, not just back from the 70s and 80s, but the more recent ones. But lately, there hasn't been any G.I. Joe movies. There hasn't been too many of the G.I. Joe figures that have been created, much less collectors. And a couple of years ago, on a few of the crowdfunding sites, a few companies popped up where they were looking to crowdfund $300,000. That would cover the licensing, the molds, and the manufacturing. And so part of the way they promoted it was If you invest X amount, we'll give you these figures. If you invest in the next tier, we'll give you additional figures. Next tier, we'll give you these exclusive figures and items, accessories that nobody else will get, or they will not be available to the public once we launch our business, making them truly collectible. And they got it down so well that these businesses every couple of months would launch a new company. They started off first with military figures, then they went to I think Greek mythology, Roman mythology, Western, and they just kept cycling through, and they every time they would reach their goal of 300,000, but they did in a way. And so what I highly recommend, if you're looking to go into crowdfunding, research, see who else is there doing a business similar to yours. How are they crowdfunding? How are they doing the work? What are they promoting? What are they offering? Someone that came to me, I recommended they were in the car wash business, mobile. They're trying to win a bigger contract from U-Haul to wash additional U-Haul vehicles at additional sites. They need to buy additional vans. So one of the things I recommended is, well, if you do crowdfunding, you can offer a free car wash. Invest $10 in my business, we'll come out and wash your car. Invest, 200, 300, we will come out and do a mobile detail of your car wash and wax, whatever it may be, right? So those are ways to definitely promote or push under crowdfunding. One thing to be careful is unaffordable and unsustainable loans. There are many predatory lenders out there that will provide interest rates as high as 95% on average. I've seen interest rates over 100%. I've had clients who have reached out who have had loans that are 130%, and after a year, they owed more than what they started because they were only able to pay the minimum due because of the high interest rates. The monthly payment was so high. And then what they do is, because the monthly payment is so high, with these predatory lenders, they actually deduct the money daily or weekly directly from your checking account because they want to make sure they're collecting every cent every day to reduce their risk. It's not worth it. I've had entrepreneurs push back and say, well, maybe I can get one of these loans to get my business to the next level, and then I can turn around and get a real loan and pay this one off. The interest rates are so high, you can't get over it. You're just eternally paying. So be very careful when you get a loan. What's the interest rate? What are the terms? Can you pay it off sooner? How long do you have to pay it? Is there a balloon at the end, meaning you have low payments front end, and then on your fourth or fifth year, you have to pay a 20 or 30,000 balloon payment, and that's why they were able to give you low payments on the front. Be very careful. Know all the terms before you sign anything. Read it. Now, as you're looking to start a business, I'm going to now get into some of the best practices or some pointers, things to keep in mind. I talked earlier about cash flow. Here we're looking at a slide that says balance passion with wisdom, meaning there's a lot of elements within your business where there are going to be challenges that you may not know marketing, you may not know accounting, you may not know human resources. You need to take a lot of time to learn a little bit of everything. 82% of businesses fail due to cash flow problems. Cash flow essentially means your overhead or your total cost are $5,000 for this month. If you're making $8,000 a month, that means you have $3,000 cash flow as long as the money is paid that month. What happens with many businesses is that you will give a client, let's say, a 30-day, a 60-day, a 90-day terms of payment. So your costs are $5,000 this month. However, you may not get those $8,000 that month. You may get them over the next couple months. And so now you're in the hole $5,000 if you don't have that money, if you don't have cash available with your account, so in your business. So you want to save up and have cash flow available for emergencies. Just because you have excess money in your account doesn't mean you should now turn around and spend it all in marketing, spend it all in inventory, do an upgrade, buy a brand new high-end vehicle for your business to make it look that it's doing well, to promote, to bring clients. No, cash flow is very, very key. For example, flower shops. If you are looking to open up a business that sells flowers, something to keep in mind, and you may already know, you have two very high or busy times of the year within the first 6 months of the year. You have Valentine's Day in February, and then you have Mother's Day in May. Usually these 2 months, if you promote well, you're going to do very well because, again, those are two holidays, 2 days where people buy a lot of flour. So you may exceed your sales significantly. But there are no other major holidays till the end of the year around Thanksgiving and Christmas where people will tend to buy certain types of flowers, Christmas, poinsettias, among other items. And so it's going to be pretty quiet. And if you don't understand your business and you open in January and then you have an influx of cash in February, and then you have another influx of cash in May, you may think, oh my God, I keep running out, I'm selling out. I'm going to lease the space next door, double the size of my business, the space, so I can have more flowers, more inventory. And then for the next 6 months, you have just basic or low sales. And you're going to run into a cash flow problem because you spent the cash you had available. So cash flow is very key. You have to understand those terminologies, what happens, how it works. And then you want to think big, document all. As a small business owner, everything has to be documented, from your accounting, how much money is coming in, how much money is going out, to any sales, any contracts. Don't do it only on a shake of a hand. If you have to type it into a text and text it to someone, email it to someone just saying, hey, these are the terms of the sale that we agreed upon or talked about. Just wanted to put it in writing. Let me know if you disagree or if there's something that is wrong. Down the road, if you have to go to court to sue the person because the contract was broken, you've memorialized the conversation by sending the email, the text that day. Because 6 months, a year from now, when you go in front of a judge, and if you have nothing in writing, it's your word against their word, and whoever is more convincing is possibly going to win the case because there's nothing in writing. And you're both going off memory of what you believe or your interpretation of the terms. Put it in writing. Even if you can't get a signature, it's still been memorialized. That's going to have some assistance. So document everything, put everything in writing. You need to document to maintain records of what your income is. Every time you may reach into the till, into your register, to borrow a little bit of cash for a lunch, a meal, or something, that technically can be considered income. So you want to document, because at the end of the year, when you have to do your taxes, you have to document your income. And then you want to keep records needed to figure out all your deductions, any canceled checks, receipts, other evidence, bank statements. And you want to maintain those records for as long as it's needed. And how long is that? Well, the IRS requires 3 years, but if you're investigated for fraud and perjury, 6 years. Now, again, you may not be committing fraud or perjury. Maybe you or your tax accountant made a mistake, and now the IRS decided that maybe there is fraud or perjury, and they're going to come and say, we need 6 years worth of documentation. And because you are being good, and you have not committed it, you're only keeping 3 years worth of documentation. Guess what? The IRS doesn't care. They're going to want to look at the documents to verify you've not committed fraud and perjury. So definitely probably keep 7 years. Keep that extra year in there worth of documents to make sure that you can prove you've not committed fraud or perjury. And the IRS takes any type of record keeping, Notepad, Microsoft, Excel, other. And at the end, I'll talk about resources where you can go and learn how to do this and how to do it correctly. And it's very important to keep records. If you want to get a loan down the road, you want to track your profitability. Are you making money or not? You want to make sure you don't have an expensive hobby. You want to make sure you have a business that's making profit. And by keeping and documenting everything, maybe if you made profit during certain months, what was the difference? Did you have more sales? Did you buy products that were less expensive and therefore made more of a profit from what you paid to what you sold? By documenting, it's easier to keep track and verify. And it's key to a successful business, of course. You want to open up a business account. Do not intermingle your business with your personal money. So shop around for the best account. Just because you shop at Bank A doesn't mean Bank A has the best business account. Check with Bank B, C, D, E. Some of them, if you're a veteran, some of them provide free services. I think Union, if I recall, Union Bank provides 1 or 2 years of a free business account to veterans. Other ones will provide special discounts for the first year. So shop around, find out who has the best business account. Again, every penny counts when you're starting a business. Save your money, use it, spend it wisely. And you want to avoid claiming personal expenses or business expenses. Always keep them separate. The top 3 expenses reviewed by the IRS when you have a home office are deductions, auto expenses, travel, entertainment. So you want to make sure you do things right. And again, document, document, document. Very, very important. One IRS auditor, one time during a presentation, we were sharing the time I presented my side. They covered, of course, the taxes, the documentation, and general information. And afterwards, we're chatting, and they gave me an example of a business that they audited and said, I had a business owner that every 2 weeks deducted a dinner. It was always at the same restaurant. And usually it was the exact same 2 meals. So it was one of 2 things. Either the business owner and a friend or family member went out for dinner every 2 weeks to the same restaurant and called it an expense, or the business owner took their client every 2 weeks to a restaurant and forced them to eat the same meal every week. What's more likely? Most likely it's a personal expense, and they were writing it off as a business expense. The IRS will go through the documents, keep things separate, be careful, be thorough. And don't intermingle, again, your personal and business expenses. Insurance. Insurance is very, very important. There's a wide range of insurance options out there, and sometimes it may be confusing which is the best insurance to get. You have property, you have liability, umbrella liability, motor vehicle, workers' comp, and so on and so forth. So you have an option to either talk to a broker or an agent. What's the difference? An agent works for the insurance company that they're providing a quote for. So if you go to insurance A, company A, and you're talking to an agent, they're going to quote you insurance for only that insurance company A. However, if you're working with the broker works for you, and they should be providing you at least 3 quotes from 3 different insurance companies, and then explaining to you what the difference is in price, the levels of coverage. And I recently purchased a home, and as I went out and got about 5 or 6 different insurance quotes, a lot of them covered the same elements, but there were a few that on some covered personal property, on others it covered special plumbing coverage was included in case the line got backed up. In another option, there was a different option. So even though the prices were somewhat similar, not just did the level of coverage change a little bit, there were a few extra items that were covered, jewelry, clothing, and other items from one to the next that, hey, if I'm paying the same, which additional options do I want included or for free? Because it's the same price from one to the next. So again, shop around. Towards the end, I'm going to provide a link to a website where we post our webinars. That we are adding a new webinar that is specific on insurance. It's an hour long, and we go into the different types of insurance, what they cover, what they do. So you're more than welcome to join us. And then, of course, either you can always go to the website or call the state of California's Department of Insurance, and they can also provide you additional assistance and guidance. So now that we're back at it, part 2 is choosing your business structure. So we're going to talk about, I'm going to cover, again, the regulatory side of it. The first topic is choosing your business structure. Because as you're going to open a new business, you have to have the right business structure to operate legally. So what risks are you willing and able to tolerate? As a sole proprietor or a partnership, essentially your business and your personal belongings are one and the same, because you yourself are the business. And so if there's ever any type of lawsuit, you're exposing your business debt and judgments, and they can come after all your personal belongings. So when you're a sole proprietor partnership, again, you are the business. If you end up forming a legal entity, such as an LLC, a C Corp, S Corp, then there is some shielding that's provided from your personal liability. But again, there's more rules, there's more requirements, potentially higher taxes on the front end. You also have, if you are the personal guarantor of your corporation, then you can also be personally held liable. So there are some challenges, and it really depends on your business. If you recall at the beginning, I said I'm not an attorney. So since I'm not an attorney, I cannot provide legal advice. What happens many times is with businesses, when a business is starting out, many of them tend to start as a sole proprietor partnership because it's easy, it's straightforward, it's inexpensive, and it gives them a chance to test their business idea before they decide to go into a corporation. As they grow, there's more liability, more exposure, more money, because they're doing well. Some other businesses directly go to a corporation because they want those added protections. Only an attorney can provide that level of legal advice. So a sole proprietor essentially is a one-person owner, yourself. And if you operate a sole proprietor just as yourself, if you operate as under your name, then that's it. However, if you're a sole proprietor who is operating under a different name, using a business name, right? My name's Ernesto Bobadilla. So if I'm not working or operating as Ernesto Bobadilla, or if my business, let's say I'm going to open up a sporting goods store, and the sporting goods store, if I call it Bobadilla's sporting goods store, my last name is in the business name, then I don't have to register it. However, if it's just the best sporting goods store, or if I'm a partnership as the owner of that sporting goods store, I must register my business name. And so I register my name. And of course, if you're going to do a corporation, then you're forming a corporation. When you're registering your business name, which is required, again, if you're not using your last name in the business name, or if you're not operating as yourself, or if you're in a partnership, you're going to register your business name at the county level. If you want to do a corporation, you have to go to the state. For a sole proprietorship or partnership, if you're going to register it, many of you know it as a DBA, doing business as. The other term is a fictitious business name, runs about $100. If you file with the state as a corporation, the only reason there's a cost range is because many need an attorney to do the paperwork. The paperwork can be complex. However, the LA County Library, through their database, their legal database, you can access the NOLO books. The NOLO books are a great selection of books that walk you through how to file or form a corporation in California for an LLC, a C Corp, S Corp. So if you're the type that is willing to do the due diligence, read through the book, go through the forms to fill them out yourself, then you are able to do it yourself and save the money of paying an attorney to do the paperwork for you. But again, that is your decision to decide, but the resources are out there. So if you, again, decide to go as a sole proprietor, and you're operating under your name, or your business name has your last name, you don't have to do anything else. You don't have to get a DBA. Your fictitious business name, you can actually start operating your business. At least the ownership part has been met. If you're going to operate as a sole proprietor, if you're operating as a sole proprietor using a fictitious business name or doing business as, or as a partnership, meaning you and a few other people are the owners of the business, then you must file a fictitious business name or DBA. You would do that with the LA County Register Recorder, County Clerk. And that's regardless of where you're located in LA County. You go to lavote.net website. You can submit your application online, in person, or by mail. And again, a fictitious business name is only required as a sole proprietor if your business doesn't contain your surname, your last name, or if you're a partnership. If you decide to do a corporation, then this is not required. You can avoid this as well. You don't need to register the name because you are creating a corporation, a legal entity at the state level. Now, just to go into a little bit more on the sole proprietor, and I know someone did ask that question. Let's say you have Doug Smith is opening a business and he's debating on the business name. He's thinking of either D. Smith Consulting or D. Smith Group. He's a sole proprietor, meaning he is the only owner. And California law only requires the last name, not the first name in the business name. So is a fictitious business name required, or a DBA, for D. Smith Consulting or D. Smith Group? So under D. Smith Consulting, he would not be required to have a fictitious business name or DBA. However, for D. Smith Group, as a sole proprietor, he would. Why? What's the difference? So when you have D. Smith Group, it implies multiple owners. So because it implies multiple owners, other examples would be D. Smith and Sons, D. Smith and Associates, etc. You need to register the business to show that you are the only owner as a sole proprietor. You're not a partnership. So that would be the main reason. And then the other side of it is, do you need a fictitious business name for a corporation, LLC, or partnership? So no, if you form a corporation, an LLC, actually for a partnership, you do need a fictitious business name. That's supposed to be for LLP, limited partnership, which is more for attorneys, doctors, in that type of industry. So I need to update the slide. You would not require a fictitious business name because, again, you're filing a legal entity through the state versus just being a sole proprietor or a partnership at the county level. However, just as a note, if you have a company, XYZ LLC, and under the LLC, you're going to provide different brands. You're selling maybe brand A, which is clothing, brand B, which are shoes, brand C is food. You may want to use a different name than your LLC. So your clothing line, your brand A, you can come up with a business name, which then you can register a fictitious business name or DBA so that you can market that brand under that name. So these are a few nuances. It starts getting a little bit more complex, but just providing the example how you can also use the DBA under your corporation to brand. The benefit is you can now operate 3 different business names under your LLC. The drawback is if brand A does something wrong and there's a lawsuit under brand A or company A, and even though it's not making a profit, if you're making a profit in your company C or company B, because they're all under the umbrella of the LLC, they can go after all the companies because they're all under your LLC, right? You're just basically doing business under these different names. but it's still the same LLC or corporation. So something to keep in mind that if you do something like this, eventually if brand B and C are doing money, you want to break those off as their own LLCs or C Corp, S Corps. But again, that's getting a little more complex legally. Talk to an attorney for better direction or advice. If you want to learn more, the California Secretary of State, where you file for a legal entity for your LLC, C Corp, S Corps, does provide additional information. And actually, I'm going to need to remove the link. The Franchise Tax Board no longer has this booklet up, unfortunately. But you will, with the slides, you will get the screenshot. And what this does, it provides you a little bit of a tax information depending on what you are. If you're a sole proprietor, a partnership, a corporation, or an LLC, if we look under the tax rate, you'll see what the tax rate is, anywhere as a sole proprietor from 1 to 13.3%. On a partnership, it doesn't apply the tax rate. It's a little handled differently. For corporations, here are your rates. The big difference is your minimum franchise tax is, as a sole proprietor partnership, it's not applicable, but the moment you open up a corporation or LLC, you're going to have an $800 minimum franchise tax. What does that mean? You form your LLC today, but it may take 6 months to a year before you open, because let's say you're opening up a restaurant, you lease the space. Once you lease the space, you have to do the construction, you have to retrofit it to a restaurant, you got to build out the kitchen. And that sometimes can take 6 months to a year based on the size, the work, any delays from the contractor, any delays from the permits from the city or the county to issue the permits or do the reviews and sign-offs. And so now year one passes, you've not had any sales. So technically, if you've not sold, you've not earned any income, you should not be paying taxes. As a sole proprietor, you would report zero income, no taxes. As a corporation or LLC, again, it provides you greater protections. However, you will have to pay your minimum $800 taxes. Once your income is greater than a certain amount where your taxes owed are more than $800, of course, you pay that higher amount, but there's a minimum of $800 in taxes owed annually. So this just kind of gives you that little breakdown of what requires, what forms have to be used, when the payments are due, etc. So I'll keep the slide in, but I'll remove the link since it's no longer active. I tested earlier in the week and I forgot to remove it from the slide. So once you've chosen your business structure for your company, the next thing is your federal business tax ID number, also known as an employer identification number. It's a 9-digit number. It helps to protect your Social Security number. It is required by any business that hires employees. So as a sole proprietor, you would not be required to have an EIN. You'd be able to use your Social Security. However, the moment you're going to hire an employee, you are now required to have one. Any non-employer are also required, which basically means a corporation or partnership. If you think about it, a partnership has multiple owners, so there's multiple Social Security numbers, so you can no longer use the Social Security. That's why an EIN is required. A corporation is its own business entity, and so it needs its own identification number for tax purposes. That's why it's required to have an EIN. To get your EIN, you would go to the IRS to apply. It's free to apply, there's no charge. And as a sole proprietor, we usually recommend just to get your EIN to have it so when the times arrive when you're applying maybe for a loan or you're applying for doing some type of contract and they ask you for your tax ID number, instead of providing your Social Security number as a sole proprietor, you can provide your employer identification number and protect your Social Security. The next item is depending on where your business is located, whether it's home or brick and mortar. And when I say home, usually for online businesses, you're operating from home. The additional permits are going to be dependent if you're located in the city or unincorporated LA County. Many of us, I don't know, were now being with the county, I know what many of the unincorporated areas, but prior to coming to the county, I may have heard of unincorporated. I really didn't know where the unincorporated areas are in LA County, and many of you may not know. If we look at the two addresses that I looked up, the left one is in West Covina, and if you pull up the address in the system here, it does show that it's in West Covina. However, the one on the right side says La Puente, but it's unincorporated Avocado Heights. So as you're looking to open up a business, you want to make sure that you run the address through this website, lavote.net precinct map, district map, look up by address. This will confirm that if you're in a city or unincorporated, because depending where you're located, that's where you need to go get your additional permits and licensing. The reason La Puente says La Puente versus unincorporated Avocado Heights is based on the zip code. The zip code is tied to certain cities, and with the post office, the United States Post Office, it's going to show up as La Puente versus unincorporated. So that's why you want to verify the address if you're unsure. Once you have verified where your business is located, if it's in a city or unincorporated, a great site to go to is calgold.ca.gov. It was created by the state of California. If you enter the city or unincorporated county, and if you enter the type of business, it's going to give you a long list of all the permits, licensing, agencies you may have to deal with in getting your permits and licenses. It's just a great little checkoff list that you can use. As part of the list, it tells you what that agency does, their website, their phone number, so that way if you have questions or you're unsure if you need or don't need it, you can definitely reach out to the agency to learn more. Now to cover the key elements of permits and licenses to keep in mind. Zoning. So the planning department's role, they confirm the zoning and permissible land use of each location. They will process any land use applications or permits or any other zoning issues. So earlier when I was doing the business plan and doing the market analysis and the questions, one of them was zoning. And I said, do not sign any leases until you make sure that you are authorized to do the type of business you want to conduct at that location. So for example, it's an office space, you want to do retail, just because the landlord says, oh, sure, you can turn this space into a retail, it doesn't mean you're allowed to. Once you confirm the location of the address, if it's in a city or unincorporated, you want to reach out to the planning department. Usually each city has it where City Hall is. And if it's unincorporated, it'd be regional planning. Give them a call, give them the address, and they'll confirm over the phone if you can or cannot operate the type of business you plan to at that location. The next, and with unincorporated, if you're unincorporated LA County, you can definitely give them a call, shoot them an email, and again, they will verify the information for you. And again, I've said it multiple times, one of the biggest complaints I get is, I signed a lease, I find out the city will not allow me to operate my business here, the landlord will not cancel my lease, but they said I could operate here. Before you sign a lease, verify, verify, verify. Next, building and safety only comes into play if you're doing any type of new construction, addition, or remodel. So for those of you who are going to have an online business and you're going to operate from home, you're not selling out of your house. People aren't coming to buy from your house. You're not having customers come to your house. All you're doing is essentially setting up your computer at home, or if you have a consulting business where you have your home office, but you go out to the field and you're not doing any construction, you will not need a building permit. For those of you who are going to be leasing a space and they're doing any type of construction, remodeling, additions, you are required to go to building and safety to get a construction permit. And what they're going to do is they're going to make sure that everything that's done is compliant based on building codes and local planning requirements. The last thing you want is a contractor to come in, remodel the space, whether it's your home or a commercial space, and they do it incorrectly, that someone gets electrocuted, the place gets flooded, the ceiling collapses because things were done incorrectly and not per code. Building safety will require permits to be submitted in advance, the plans of what construction is going to be done. And then through the process, they will do additional checks or sign-offs to make sure all the construction is done correctly and to code. If you're in a city, check with your local government. Again, they're usually found where City Hall is. You'll have the Building Safety Department. If you're an unincorporated, you need to reach out to the LA County Department of Public Works, Building and Safety. Public health. So for those of you looking to provide or sell any type of food, they also handle all the permits, tattoo parlors, garment, etc. And I'll cover all the different permits, but food is the most common. You're going to need to deal with the LA County Public Health Department. They enforce state regulations, so they're only enforcing state. They don't pass or adopt local laws. They cover all of LA County with the exception of Long Beach, Pasadena, and Vernon. So if you are doing any type of food related or any other business that deals with public health, you need to go to LA County with the exception of, again, if your business will be or live in Long Beach, Pasadena, Vernon, check with the local health department. Public health deals with various programs, body art. So if you're a tattoo artist and you're looking to open up a tattoo parlor, you're going to have to get a public health permit. If you're opening up a garment facility to manufacture garments, they do garment inspections. Any type of jail or facility, they do the inspection. Any type of organized camp, they do the plan checks again. If you're opening up a restaurant, they're going to have to review the plans to make sure the kitchen is built out per code. Something I learned when I started doing this job is actually restaurants are required to have multiple sinks, one for the mop or dirty water, which is separate from the sinks where they have the food, because the last thing you want is them to be dumping dirty water or mop water, right? Mop water into the sink where they're going to go and wash the vegetables. They're going to dice and serve to you when you go eat. So multiple sinks and drains are required, among many other very specific safety health reasons. So they're going to review the plans and anything, again, food related, whether it's specialized food service, street vending, restaurant. They also deal with vector management, vehicle inspections, a food truck, a mobile cart, and wholesale. Any store that sells any type of food wholesale, they verify and check. The next thing you are required, if you are selling any type of product, you're going to need your seller's permit. The seller's permit is a state requirement, and it's obtained through the California Department of Tax and Fee Administration. So if you're providing any type of sale, you're going to need your seller's permit, because if that product you're selling is taxable, you are responsible to collect the sales tax from your client, turn around and make the payment either quarterly, twice a year, or annually to the franchise tax board for the sales tax that you collected. You are only required by law to have a seller's permit and collect sales tax if you're selling in California. Any sales outside of the state of California, for those of you who are online vendors, if you're selling outside of California, you're not required to collect a sales tax and pay it to the state of California because you're not selling in California. However, if you're selling in California, and this is specific, if you have a brick and mortar, you're going to collect the sales tax percentage based on your location where they're coming in to buy the product. If you're selling online, you must collect the sales tax based on the location of the delivery. So if you're selling online and today you sell to someone in Downey, someone in Hollywood, someone in Pasadena, someone up in Lancaster, those 4 cities, the sales tax may vary from one city to the next, and therefore you need to know what sales tax is by city and collect the right sales tax. So very important to understand. If you reach out to the California Department of Tax and Fee Administration, they have some great classes that you can take online. Currently, they're not doing them in person because of COVID-19, but online they do, and they do provide some great literature information to understand and learn more about the seller's permit and how that works. By having a seller's permit, you're entitled to a resale certificate or resale license. What does that mean? If you're buying product in bulk to sell, you're not the end user, so you should not be paying sales tax. So when you go buy from the wholesaler your products, then by having a seller's permit, you let the wholesaler or whoever you're buying from that you have a seller's permit, you're selling, they're going to resell it and therefore should not be paying sales tax. What they're going to do is they're going to pull out a form, fill it out, noting who you are, your business, your seller's permit number, and the products you're buying, and that you're not paying sales tax. Because at the end of the day, you should not be paying sales tax on something that's going to increase your product by approximately 10%, and then when you turn around and sell it, you're charging the tax, the 10% tax, give or take percent, that you need to collect. So the one thing to keep in mind is if you have a bike store, bike shop, and you're buying a TV, whether it's for business or personal, you must still pay the taxes because you're not buying the TV to sell it. You would only avoid paying sales tax on bikes or bike accessories because that is the type of business you have. Anything you buy that you're going to turn around and sell in your business, you can avoid paying taxes because you'll be responsible to collect those taxes. So seller's permit, very important for those of you who will be doing any type of retail. A business license. Now, business licenses get a little tricky. If you're in a city, you're most likely 99.9% of your businesses will require a business license. If you're an unincorporated or one of the contract cities that have contracted for the tax collector, you may or may not need a business license. So again, that's very important to know where you're located to find out if you do or do not require. So for a business license, again, if you're in a city, check with the local financial department. At your city hall, they'll be able to let you know about the requirements for the business license, how to apply and get it. You're required to have one to conduct business. If you have a home business or online business, you will need to check with your city to see if you're required to have a business license. For unincorporated, Malibu, Santa Clarita, and Westlake Village, you can check with the treasurer tax collector. The biggest difference with unincorporated is that it's regulation-based, where in the cities, it's tax-based. Taxes, the city's collecting the tax from your business. That's what I'm saying, 99.9% of all businesses in the city will require a business license. If you're an unincorporated, because it's regulation-based, not all businesses require a business license. So for example, a retail store. A retail store in unincorporated LA County does not require a business license. However, in any city in LA County, whether you're in Downey, Pasadena, Long Beach, Burbank, Glendale, wherever it may be, Santa Monica, you will be required to have a business license. So you'll have to go apply for one. If you're a restaurants, whether you're unincorporated or in a city, will require a business license. So again, in unincorporated, there's some businesses that do not require a business license. You need to check with the treasurer tax collector. However, if you're in a city, I can say with most certainty, you're most likely going to require the business license. Go and apply. And when you're applying for a business license, whether it's from the city or the treasurer tax collector for an unincorporated, be prepared, call in advance, figure out what you need. Some of the cities do allow you to apply online so that we can have your paperwork ready. They're going to ask you for things such as your fictitious business name, your DBA, your articles of incorporation. If you're a corporation, an LLC, they're going to ask you for your seller's permit, some type of ID, maybe your social security number, your work history, your lease rent agreement. So find out what you need, what the paperwork is before you go and apply, so that way you're ready and avoid a double trip. We're coming near the end, so thank you everyone for your patience through this long presentation. When you're looking to open up a new business, as many of you know right now with the COVID-19, the pandemic, there are certain requirements. As many of you know, many businesses have been shut down. Some have reopened recently, but with certain restrictions, such as restaurants only can offer outdoor dining, takeout, drive-through. I know earlier in the week I saw that we may be falling to the next tier, which may allow partial indoor dining, which means probably limited occupancy, 25% occupancy, which probably means they'll be able to have 2, 3, 4, 5 customers eating indoors to maintain that social distancing, depending on the size of the structure. But there's certain elements that are in place. So as you look to open a business, you need to account that some of these restrictions are going to fall on your business. And some of the requirements deal with workplace policies and practices to of course, protect the employee's health. There's going to be certain measures to ensure physical distancing. There are procedures to ensure infection mitigation, effective communication to the employees and the public of what they're required to do, what they're supposed to do, from mask wearing, sanitizing, physical distancing, maybe special signage where one door is used strictly for entering, the other door strictly for exit, so people aren't coming face to face as they're entering and exiting to maintain, again, social distancing. And then, of course, ensuring equitable access to critical services based on the requirements that are put in place. Make sure that no one is being turned away illegally, right? You're not ADA compliant. So to understand what these requirements are, you can go to this link, and again, because you'll get the page, you'll be able to send them the link. You'll be able to click on the link. You go to the website with public health, scroll down to the type of industry or type of business you're looking to open, and once you decide what type of business you're opening, you can look at the specific requirements for your business. If you have questions, you can't find it, definitely at the end, I'll provide my contact information. You can reach out to us. We can definitely walk you through, provide you more guidance. And again, these protocols must be in place before your business is up and running and operating. And you can self-certify once your business is open through a video. So it gives you a special poster you can put up to let your customers and your employees know that you've done the video, that you understand, and you're complying with the public health requirements. And with that, that brings us to the end. So I'm going to quickly go over the resources, and then we'll circle back to Q&A to answer any new additional questions you may have. So for resources, today I've provided a lot of information. It may feel overwhelming. You may not know where to go, where to start. So here's some help. I'm going to cover some information on online resources, online and college courses, and then finding mentors and counselors. And all this is for free to help you in helping you reach your goal, which is potentially open your new business, whether it's online or a brick and mortar. First off, if you need credit assistance, if you have any questions, any issues, you can call this 800 number. They provide credit counseling. They can do a credit report review. They can help you do debt management plans and assist with bankruptcy counseling and education. The services are free for high-level counseling assistance. If you want to get into a very specific management plan where they actually really sit down with you and work with you on a daily, weekly basis to help you manage your debt, then there may be a minimal cost. They are a nonprofit, and again, most of the services are for free. It just depends what level. But if you keep it at general level assistance counseling, they will be able to assist you. Legal assistance. BetZedek provides some great legal assistance from entity formation. They can do the paperwork for you to do your C Corp, S Corp. They can provide you the benefits of or differences between sole proprietor, partnership, or doing in LLC, corporation, C Corp, S Corp. They can help you with commercial real estate, intellectual property, employment law, contracts, license, and permits. There is a financially eligibility factor. They are nonprofit that partner up with some of the top law firms. So you are getting, actually, if you qualify, a very high-end law firm. So you can either call the 323 number or you can go to the website and apply. Please check off that you've been referred over by the Department of Consumer and Business Affairs. We do provide some funding to them to make sure they have the services and continue doing this great work and providing free service. And we want to keep track of how many businesses refer and they can assist to see if we continue definitely providing funding. So it's not because we get anything in back. We want to continue that these services are being provided to our businesses in LA County. So please, if you do reach out to them, let them know that DCBA or Department of Consumer and Business Affairs has referred you. When you get the slides, you'll have our contact information. Of course, the business resources, one of the amazing resources available at LA County Library, which many of you know about the County Library since you're here, and they're hosting us today to provide you this website. They provide great selection, as many of you may already know, and if you don't, they have great websites to learn about accounting, budgeting, to learn marketing, hiring practice, human resources. They have the NOLO legal books, and a lot of these resources are available online, these college classes, Liza.com. So please take advantage. If you're not aware of these services, connect with your local county library to learn more and get access and assistance, and to their business resource center on their website. If you don't already have your library card, get it. Moving on, SCORE. SCORE is a great resource. They were established by Congress in, I believe, 1964. They're a nonprofit, and essentially they are mentors. These are people who have owned a business, ran a business, whether they're own businesses or major corporations, and now they want to turn around and provide their business acumen to the next generation of business owners. And so instead of volunteering to feed the homeless or Habitat for Humanity, they're volunteering their time to assist you. So as you're looking to open up a business, they are going to mentor you and help you. So they offer mentoring. It's free, confidential, in person. Right now with COVID-19, it's not going to be in person. It's probably going to be on the phone, through email, or through virtual settings such as Zoom. They provide a large variety of workshops, live again right now because of COVID. They're not doing them live, but they are doing them virtually. They have on their website a lot of webinars and interactive courses, and then they provide also business templates, guides, and they can definitely help you with reviewing your business idea. And again, a mentor, it's always great to have a sounding board, and they have that business background that they can definitely give you that guidance and help you focus and fine tune your business idea to ensure its profitability. They can help create your business plan and explore marketing strategies, advise on accounting, provide human resource guidance, and much more. If you already have a business, they can help you revisit your business situation to see how you can increase or improve your marketing, your sales plan, identify new business opportunities, and help you grow. Great resource. They're awesome. They are throughout LA County. They have 3 chapters: Greater LA, East San Gabriel Valley, and Long Beach South Bay. For more assistance or to apply, you can go to score.org, click select a mentor, request, and submit your request. And I've also included the information and links to the specific chapters. Take advantage. It's a great free resource. And they say that you have a 67% greater chance of success with the mentor. Next, if you will be located in the city of Los Angeles conducting business, the city of LA has a business response unit. And what the business response unit does is they will assist you and guide you with navigating any of the complexities of a business license, permit, or any questions you may have within the city of Los Angeles, or any special programs, grants, loan programs they may have within the city. As you know, the city of LA is the largest city in LA County. They do have a lot of different resources for their businesses. Reach out to them for further assistance or many questions you may have. And now finally, to just the list of links to access the Small Business Administration, federal government, the IRS. For one or many of you that may be interested, again, under the patent trademark, more questions about copyright, go to the U.S. Patent Trademark Office. To learn more about grants and loans that are available, you can go to the federal government's website. Anything related to labor law and issues, small business information, the U.S. Post Office. So I'll pause here for a second. The U.S. Post Office has something called USPS Every Door. This is a great resource for marketing. It allows you to create a flyer and directly choose which communities, neighborhoods, households to deliver. And on the website, you can see what the breakdown of the community is, whether it's families, singles, apartments, household, what the median income level is. So you can target which houses, customers you want to, or which communities you like to send the flyers to the post office, and it's inexpensive. So great way to resource. And here's the SCORE link again that I just talked about a few minutes ago. The permit reference info that I talked about earlier, and again, just kind of go through the different links. The other link I want to focus on is this one here in the middle, which is the Small Business Development Centers, SBDC. Similar to SCORE that provides mentoring, SBDC provides counseling. They're a nonprofit. They are funded by the federal government, and their counselors will be able to sit down with you at this time virtually, down the road in person, to walk you and make you loan ready. They'll help you develop your business plan, your financial plan, and see if they can help you get that loan to get your business going. And they will walk you through everything and give you the guidance and feedback and meet with you over a few months to get it accomplished and done. So for those of you who don't want to sit down and read a book, this is definitely not a great resource, but you still have to do the work. They're not going to do the work for you. You have to do the work yourself, but they will help you along the way so you can get it done and accomplished. So I recommend both taking advantage of SBDC and SCORE to get your business plan together and get your business up on the right track. It is this month. So for the person, hopefully you're still on, that was asking about copyright. We do have a workshop at the end of this month for free on March 25th, the nuts and bolts of copyright law for small businesses. And then we also have one on the 18th on ADA and privacy law compliance. Please visit our website. At the beginning of the month, we usually post the new workshops for the month. Join us, join our workshops, and take advantage. They're all for free. And these are specific legal based, the ADA compliance and the nuts and bolts. And that brings us to the end. Now we can move over to Q&A. And also here's the information. Our physical location is currently closed, our Entrepreneur Center in the East LA area. However, you can call me at this number or you can email me at this address. This email actually is monitored not just by myself, but by my 4 staff. And one of us will definitely get the answers back to you and the assistance you are seeking. And again, thank you for